This is Trade Alive with IUX, where markets come alive and trading gets real. Let's go live.
This podcast is brought to you by IUX Trading Platform, elevating your trading experience.
Imagine two completely different worlds. On one side, picture a grand ballroom under the spotlight. A man in a tuxedo is moving with absolute precision. Every step is calculated. Every turn is perfect. He is an artist, a performer, a star. Now, picture the other side, Wall Street in the 1950s. Crowded rooms filled with smoke, men in suits screaming at each other, ticker tapes running endlessly with chaotic numbers. This is a world of noise and greed. Usually, people belong to only one of these worlds, but there was one man who conquered both. His name was Nicolas Darvas. He wasn't a banker, he wasn't an economist, he was a refugee from Hungary who fled a war-torn country to become the highest-paid ballroom dancer in America. But while he was touring the world, dancing for crowds in Paris, London, and New York, he was secretly building an empire in the background. Using nothing but a weekly newspaper and sending cryptic telegrams from hotel lobbies, he did the impossible. In just 18 months, between 1957 and 1959, he turned a small fortune into $2 million. Adjusted for inflation today, that is a staggering amount of money. The experts on Wall Street were furious. They couldn't understand it. How did a dancer who treated the market like a choreography outperform the professionals who watched the ticker tape every second? Did he have inside information? No. Did he have a complex algorithm? No. He had something better. He had the discipline of a dancer and a system he created himself, a system he called the box theory. Welcome to Trader's Journey, a part of Trade Alive, brought to you by IUX Education. Today, we explore the story of the ultimate outsider, the man who proved that you don't need to be on Wall Street to beat Wall Street. Let's travel back to where it all began. To truly understand the hunger of Nicolas, we have to look back, long before the tuxedos and the champagne. He was born in 1920 in Hungary. He was a brilliant student at the University of Budapest, but history had other plans. At 23, he was forced to flee his homeland to escape the Soviet occupation. He arrived in Turkey with a forged exit visa and barely enough money to buy a meal. He was a refugee, a man without a country. But Nicolas was a survivor. He reinvented himself through sheer discipline. He taught himself to dance. He practiced 8 hours a day until his feet bled, obsessing over every rhythm and every step. He teamed up with his sister, Julia, and by the 1950s, Nicolas and Julia were the highest-paid dance team in America. He had conquered the stage. He had money. He had fame. But the plot twist. But in November 1952, fate set a trap. It happened at a nightclub in Toronto. The club owners couldn't pay him in cash, so they offered him 6,000 shares of a penny stock called Brilland. Price, 50 cents. Nicolas accepted the shares just to be polite. He planned to sell the position immediately, but he forgot. 2 months later, he checked the paper. The stock wasn't 50 cents, it was $1.90. He sold immediately and made $8,000 profit. In 1952, that was a fortune. It was more than most people earned in 2 years. And this was the moment his nightmare began. Nicolas looked at that check and thought, I slave away on the dance floor for my money. I risk injury every night. But here, I made a fortune by doing absolutely nothing. This is easy. He didn't realize it was just a coincidence. He thought he was a genius. He decided to dive into the market full-time. He walked into the chaotic brokerage offices of New York City. He was intoxicated by the noise, the shouting, the ticker tapes. He started buying everything he heard. If a head waiter at a restaurant whispered a stock name, Nicholas bought it. If a stagehand backstage said a company was merging, Nicholas bought it. He bought a company called Jones and Laughlin just because he liked the name. He bought Texas Gulf Producing because someone said oil is the future. He didn't check the balance sheets. He didn't look at the charts. He trusted the rumors. And then the reality set in. The market turned against him. He watched a stock he bought at $50 drop to $40. Instead of selling, he froze. He whispered to himself, "It's fine. It's just a correction. Don't sell, Nick. If you sell now, you lose. Just wait. It will come back." But it didn't come back. It dropped to $30, then $20. He watched companies go bankrupt. He watched his positions vanish into thin air. The $8,000 profit from Brilland was gone in weeks. And then he started losing his own money. This was the part that hurt the most. Every dollar he lost wasn't just paper money. It was his sweat. He would finish a 2-hour dance performance, his body aching, his feet swollen, and he would call his broker, only to find out he had lost $500 that day. He realized he was working for free. He was dancing just to feed the market. One night after a show, he sat alone in his dressing room. He looked at his reflection in the mirror. He was exhausted. He looked at his bank account. It was bleeding. He put his head in his hands and said, "What am I doing? I am not an investor. I am a fool. I worked my whole life to escape poverty, and now I am throwing it all away. I am listening to strangers. I am buying dreams. If I continue like this, I will have nothing left." That moment of despair was his awakening. He realized that the experts in New York knew nothing. The brokers were just salesmen. The rumor mongers were just guessing. He wiped his face. He made a vow. No more tips, no more rumors, no more guessing. He realized that his ears were his enemy. To survive, he had to stop listening and start looking. He needed a system that relied on the only thing that never lies: the price. So Nicholas made a radical decision. He stopped reading the financial gossip columns. He stopped asking brokers what they thought. He realized that Wall Street was filled with educated guessers. He decided to become a technician. But remember, in the 1950s, there were no computer screens. There were no digital charts. There was only Barron's magazine. Every week, Nicholas would sit down with this magazine, a pencil, and a ruler. He would study the tiny rows of numbers, the high, the low, and the closing price. And as he stared at those numbers hour after hour, he began to see something that others missed. He didn't see cold mathematics. He saw movement. He saw rhythm. Think about it. He was a professional dancer. He knew that before a dancer can make a spectacular leap into the air, they must first crouch down. They need to bend their knees to gather energy. Nicholas realized that stocks do the exact same thing. They don't go up in a straight line. They surge upward and then they pause. They pull back. They rest. They bounce up and down within a tight range, gathering energy for the next move. He called this resting phase a box. Let me paint a picture for you so you can see it in your mind. Imagine a stock is like a rubber ball trapped in a glass room. The ball bounces off the floor at 45. It flies up and hits the ceiling at 50. It bounces back down to 45, then up to 50, over and over. 45 is the floor, 50 is the ceiling. The stock is trapped inside this 45 to 50 box. Now, most amateur investors would try to buy at the bottom at 45, hoping it goes back up. But Nicholas had learned his lesson. He knew that cheap stocks often get cheaper. So he did something counterintuitive. He decided to wait. He watched that ceiling at $50 like a hawk. He reasoned that if the stock suddenly jumped to $51, it meant something powerful was happening. It meant the lid was blown off. The pressure was released. The stock wasn't just expensive, it was strong. It was leaving the old room and entering a new higher room, maybe a 51 to 55 box. This became his golden rule. He famously said, "I don't want to buy low and sell high. I want to buy high and sell higher." But Nicholas was scarred by his past losses. He remembered the pain of losing his sweat equity, so he needed a shield. He needed an emergency brake. He integrated a strict rule into his system, the automatic stop loss. This was his logic. If he bought the stock at $51, expecting it to go up, but it turned around and fell back to $49, it meant he was wrong. It meant the breakout was false. The dancer had stumbled. He didn't argue, he didn't hope. He sold instantly. He viewed the stop loss not as a loss, but as an insurance premium. He was willing to pay a small price to avoid a disaster. He famously said, "I have no ego. If I am wrong, I get out. If I am right, I hold on." This was the birth of his system. He wasn't predicting the future. He wasn't guessing the news. He was simply reacting to the truth of the tape. He viewed the market like a series of stacking boxes, building a pyramid to the sky. It sounds simple today, but in the 1950s, this was revolutionary. He had the strategy, he had the discipline. Now he just needed to test it in the real world. But there was one major problem. He was about to leave New York for a massive 2-year world tour. He would be traveling to Asia, Europe, and the Middle East. He would be thousands of miles away from Wall Street with no telephone access to his broker during trading hours. How do you trade the most volatile market in the world while you are performing in a hotel in Calcutta, India? The answer lay in a simple piece of paper and a telegraph machine. Now imagine the setting. The year is 1957. Nicholas is not sitting in a high-rise office in Manhattan. He's on a world tour. He's in Paris, then Hong Kong, then Calcutta, then Tokyo. He's thousands of miles away from the panic and the noise of the trading floor. In today's world, we think we need high-speed internet, 6 monitors, and Bloomberg terminals to trade. Nicholas had a telegram. Here is how his operation worked. It was primitive, yet brilliant. He arranged for his copy of Barron's magazine, which contained the weekly stock prices, to be airmailed to him wherever he was in the world. Sometimes the magazine arrived in Calcutta days late. It was crumpled, it was stained with coffee, but it didn't matter. Nicholas wasn't interested in the day-to-day fluctuations. He was interested in the trend. Every day he would communicate with his broker in New York via cables. These telegrams were expensive, so the messages had to be short, cryptic, like a spy communicating with headquarters. They looked like this: buy Lorillard 57, stop loss 56. Sell E.L. Bruce, stop loss 48. And this is where the magic happened. Nicholas discovered something that most modern traders still don't understand. Distance is power. Because he was in a quiet hotel room in India, he couldn't hear the rumors on the floor. He didn't know if the president had a cold or if there was a minor crisis in Washington. He was deaf to the noise. He only saw the closing price. If a stock was volatile during the day, jumping up and down like a crazy person, Nicholas didn't see it. He didn't panic. He only saw the result. He described himself as a silent partner to the market. But a box alone wasn't enough. He realized that for a stock to truly explode, to go up 100% or 200%, it needed fuel, and that fuel was earnings growth. He upgraded his system. He called it the Techno-Fundamentalist approach. He looked for companies that were fundamentally strong, companies with revolutionary new products or massive earnings jumps. But he would only buy them if the technicals, the box, confirmed the move. Let's look at his first big win, Lorillard. Lorillard was an old, boring tobacco company. Nobody on Wall Street cared about it. The stock was dead. But Nicholas read a small news clip. Lorillard was introducing a new filter cigarette called Kent. People were smoking them like crazy. The earnings were exploding. He looked at his chart. The stock was waking up. It was quietly building a box at a new high. While Wall Street analysts were saying tobacco is dead, Nicholas sent a cable from a hotel in Bangkok. Buy. He bought thousands of shares. The stock went from $24 to $30 to $40. He didn't take profits quickly. He didn't get scared. He just kept moving his stop loss up, following the boxes, letting the market make him rich while he slept. Eventually, he sold at $57. He had made a massive fortune on a boring cigarette company simply because he followed the price, not the crowd. He was compounding his money at a rate that seemed impossible. He was turning $30,000 into $100,000, then $500,000. He was dancing at night and making fortunes by day. But his biggest trade, the trade that would turn him into a legend, was just around the corner. It was a company called E.L. Bruce, and this trade would not just make him rich, it would nearly give him a heart attack. By the summer of 1958, Nicholas was winning. But to become a legend, you don't just need a good trade. You need a monster stock, a stock that defies gravity, a stock that breaks all the rules. For Nicholas, that monster was a company called E.L. Bruce. Now, E.L. Bruce wasn't a sexy technology company. It made hardwood flooring, but Nicholas saw something on his charts that made his heart race. The stock was trading at $16. Then suddenly, it jumped to $50. Wall Street analysts were screaming, "Sell! It's a bubble! It's dangerous!" Nicholas looked at his box. The price wasn't falling. It was holding steady at $50. It was crouching, getting ready to jump again. While the experts were selling, Nicholas sent a cable from his hotel. Buy E.L. Bruce at 53. The order was filled, and then the stock exploded. It went to $60, then $70. Here is the secret to how he made his millions so quickly. He used a high-risk technique called pyramiding. Most traders sell when they have a profit. They're scared to lose it. Nicholas did the opposite. As the stock climbed higher, he didn't sell. He bought more. He used his paper profits as collateral to borrow more money, margin, to buy more shares at $60 and $70. He was going all in. He was sitting on a mountain of leverage. And then, on a Tuesday morning, the music stopped. Nicholas was in Paris. He walked to the concierge desk to get his telegram. He expected to see a price update. Instead, the telegram read, "Trading suspended by American Stock Exchange." Nicholas froze. The American Stock Exchange had halted trading on E.L. Bruce. Why? Because the price was moving too fast. The exchange suspected manipulation. There was a shortage of shares. Nobody could buy and nobody could sell. Imagine the terror. He had put almost everything into this stock. He was using margin. If the company was investigated for fraud, the stock could go to zero. If the stock went to zero, Nicholas would not just be broke, he would be in massive debt. For days, he walked the streets of Paris like a ghost. He couldn't enjoy the city. He couldn't eat. Every time the phone rang, he jumped. Was it his broker telling him he was bankrupt? He was completely helpless. He was thousands of miles away at the mercy of regulators in New York. This is the nightmare of every trader. Loss of control. He waited. 1 day, 2 days, a week. The silence was deafening. Finally, a cable arrived. The authorities had allowed the stock to trade over the counter unofficially. Nicholas opened the paper with trembling hands. He looked for the price. He expected a crash. The price was $100. Then it went to $171. It turned out the short sellers, the big banks betting against the stock, were trapped. They were desperate to buy shares to cover their losses at any price. Nicholas was one of the few people holding the shares. He was holding the golden ticket. He finally sold his position near the top. He put down the telegram. He sat in his hotel room in Paris, surrounded by silence. He did the math. In the period of just 18 months, starting with that small seed capital, Nicolas had accumulated over $2,250,000. He was a dancer, a refugee, a man who was thousands of miles away from the trading floor, and he had just outperformed every mutual fund manager in America. He proved that you don't need to be an insider to win. In fact, being an outsider was his greatest advantage. You would think the story ends here. The hero wins. He gets the money, he lives happily ever after. But real life is not a fairy tale. Success attracts jealousy, and massive success attracts enemies. After Nicolas made his fortune, he wrote a book titled How I Made $2 Million in the Stock Market. It became an instant bestseller. But the authorities in New York were not happy. The Attorney General of New York launched a massive investigation against him. Their logic was simple. This is impossible. A ballroom dancer beating Wall Street? He must be a fraud. They accused him of lying. They accused him of being a front for manipulators. They believed no one could make that much money without inside information. They called him in for interrogation. They demanded to see every record. This was the ultimate test. If Nicolas had been lying, if he had been gambling, he would go to prison. He handed over his records. He handed over the stack of crumpled telegrams sent from Calcutta, Tokyo, and Paris. The investigators went through them one by one. They looked for the inside info, but they found nothing. All they found were daily price quotes and simple buy-sell orders based on his boxes. The authorities were shocked. The records were perfect. Every trade was documented. The box theory wasn't a myth, it was a mathematical reality. The Attorney General had to back down. This investigation, which was meant to destroy him, actually immortalized him. It proved to the world that his system was 100% legitimate. So what can we learn from the dancer who beat the bankers? Even today, 70 years later, his lessons are the golden rules of trading. Lesson number 1. Silence is golden. Nicolas failed when he was in New York, listening to everyone. He succeeded when he was isolated in India. In today's world of Twitter and 24-hour news, this is even more important. To trade well, you must create your own silence. Turn off the noise. Look at the price. Lesson number 2. There are no good or bad stocks. Nicolas famously said, "I have no ego. My stocks do not know I own them." He didn't fall in love with companies. He only cared about one thing. Is it in the box? Is it going up? If a stock stopped going up, he sold it. He treated his portfolio like a garden, watering the flowers and cutting the weeds immediately. Lesson number 3. The power of the automatic stop-loss. This was his secret weapon. Before he even entered a trade, he knew exactly where he would exit. He didn't rely on hope. He relied on his system. He survived because he refused to take a big loss. In the end, the story of Nicolas is not just about money, it is about freedom. Here was a man who lost his country, his home, and his identity, but he refused to be a victim. He used his discipline as a dancer to conquer the most chaotic market on earth. He proved that you don't need to be an insider, you don't need a finance degree, you just need a system, and the courage to follow it, even when the whole world tells you you are wrong. So the next time you feel overwhelmed by the market, remember the dancer. Draw your box, set your stops, and let the price lead the way. Thank you for joining us on this incredible journey. This has been Trader's Journey, a part of Trade Alive, brought to you by IUX Education. Until next time, keep your boxes strong. Goodbye.
You've been listening to Trade Alive with IUX. Ready to put these insights into action? IUX is here to power your next winning trade.